So I should change Thursday to a new name. It doesn't matter because that's what I say every Thursday. The Bubba Show. I'm Bubba. It doesn't matter. Jobless claims mean absolutely nothing. They have no focus on exactly what's going on. So what we do want to look at today, though, there are some news that could be possibly market driving. CPI, Consumer Price Index, tell us if we're having to pay more for goods. We've got the Empire Manufacturing, big number, New York. We've got Philly Fed, another East Coast number. These are numbers that can have a dramatic effect on the market. Now, as I've taught and shared with you on many occasions, is really what it comes down to is the market expectation. Market expectations are already built in. Bad numbers are starting to be built into the market. And if you've noticed, last week we had a couple of good numbers. The market could not rally up those numbers. You notice how the overall markets start to change. And when bad news is starting to force the market down and good news is stopping the market from going over, means that the market itself looks like it wants to work its way lower. Now we're going to find some support, okay? And even if the market is going to work its way much lower, there are going to be some major rallies within sight. But one of the things I started to talk about yesterday is why are we having some problems here and why is the market having problems? You have a big part of the population, the baby boomers and the retirees, that don't know where to put their money. So they're being forced to put their money into the markets. Now, we never like to be 100% invested. We always want to have money in safe places as well as risky assets. So what happens is the market artificially is being held up here because monies that people would normally put into CDs, higher rated bonds, other areas that are non-equity assets, there is no place to go. So everybody is being forced to come into the stock market, whether it be through mutual funds, through dividend payers, and they're forcing people to dip into their savings because if you're afraid, then you have to start cutting into your savings. Typically, the theory is you save money, and when you retire, you put that money somewhere where it generates some income where you don't have to come off the principal. And unfortunately, because of the way that we are set up right now with interest rates at zero, there are very few places to go with what we would call safety. Something to worry about. It's something to watch. It's going to be something that's going to have to be addressed through the fiscal cliff and how they're going to do this. This is why we need interest rates to start to rise. You can start to see problems happening throughout the world. The last chip to fall here was Germany. Germany is now one of the strongest economies next to the U.S. is now starting to have trouble. So these are things that we want to look at and focus on. But again, it comes back to trading your levels. We have the opportunity to be on both sides of the market and we can capitalize on both sides of the market. Keep that in mind as you're trading. If you're not interested in the short side, make sure that you've got stops working in your long positions. Make sure you protect your inventory, protect your cash. Remember, Bubba's Picks. Remember for Thursday, the Bubba Show. We'll see you Friday on Commodity Corner.